Thank you very much. Once again, I'm Todd Nuttall, CEO of Better ATM Services. Better ATM Services is a technology integration company linking the ATM and prepaid industries. And I was asked to come out and join you here today to share just a little bit of the innovation that's occurring that's intertwining the cash dispensing and cash movement world with other forms of payment like card payment and prepaid products. So with that, we're the link between these two industries. And this is progressing in the US and just beginning now to spread outside to other countries. A short video. So this video, just a few seconds long, is of an ATM in Arizona in the United States. At a typical financial institution at a bank, customer can walks up, accesses it with card and PIN just like you would at your normal bank. But the ATM has been enabled to offer Visa gift cards along with cash. So the customer selects the cards, how many cards, how much money to load on each card, and the ATM simply selects and dispenses the cards out of the cash bin just like it would cash. When those cards leave the ATM, they are activated, loaded with funds, and ready to be used immediately. So, go ahead back to the presentation there. So you probably have two questions. The first question being, how did the ATM do it? How does an ATM issue cards out of the ATM cash tray just like cash? And the second question being, why would anyone go to an ATM to get cards instead of cash? The reason they're going to the ATM is for cash, correct? So let me answer the first question, how. How did the ATM do it? The only changes that were made to that ATM that you saw were some software for handling a card transaction. Somebody purchasing a card and loading funds on a card. So that's just software. And then the addition of one micro module. This little device right here that you can not really see from there, but that is the entire physical change to the ATM. Everything else in that ATM that you saw is just as it was when it came out of the factory. Simply the addition of some software for handling a card purchase transaction along with one micro module, and an ATM can now handle the loading and activating of a card along with cash. So the other part of the equation is the card itself. See, a traditional payment card, as we all know, is far too thick and rigid to go through an ATM dispensing mechanism. So we worked with Visa, MasterCard, and others to engineer a thinner yet durable plastic card that is robust and very strong, but that could pass through a cash mechanism just like cash, and yet function at the point of sale like a normal thick plastic card. The card can be folded in one way to go in the wallet like a normal thicker card, or when done the other direction, snaps and is plastic just like another payment card, separable into three portions with which you have a card that can be used at the point of sale just like any other card. So the card is three portions. The first portion is the payment card itself. In this case, a magnetic stripe card just like a typical Visa card. The second portion is the customer information and services section. This is where people can go to check the balance of their card or to get information on any fees or other terms associated with the card. And the last is the incentive or promotion or some kind of coupon. We found it very successful that when people find a reward with their funds, it gives them an incentive to choose, well, I can get this cash out of the ATM, but there's some products that I want to buy online or other places I want to go. So if I can take a coupon or incentive with it, I can then get more value for my money. So it's really as simple as that. With these new cards and this small module, the world's fleet of over 2.3 million ATMs can now become the largest distribution channel on the planet for prepaid cards. No other channel is as large as that today for prepaid card products. So that leads us to the why question. Why would somebody go to the ATM to get cards with their cash or instead of cash? Now, the first one is fairly obvious to us, especially in the United States. Prepaid products of all types are growing. This is where people load their money on cards and take it around and use. You can use it for internet purchases. You can use it for things where currency isn't necessarily the best option today. But we're seeing people use it for gifting. Gift cards are the most popular form of gifting in the United States. We're seeing, like the Chase Liquid Card, a hugely successful program where people, instead of a normal bank account, are actually using card programs to hold and use and manage their money. Travel cards as well as transit passes are another form of prepaid that all can adopt to this type of channel. And we're even seeing government payments emerging in the prepaid market and so on. In the US, Green Dot, NetSpend, and Bluebird have emerged to be massive new prepaid programs where millions of Americans have moved to do their banking completely with a prepaid card product. So that's the first reason of why, but then let's look at this. So in your bank, we know that 56% of bank customers in the US, so these are people with bank accounts, are actually using prepaids, either for gifting or even for budgeting or giving to their children for their allowances. But we also know that of that large percentage of bank customers, 9 out of 10 of them are not going into the bank for their prepaid products. They're going to another more convenient location. There, it's typically a grocery store or convenience store where it's common to have racks of these prepaid cards for them to purchase. But a prepaid card is really, it's a financial instrument, correct? But for years, even a decade and a half, the banks have really not been a major player in this market. What's interesting is they didn't go there because the grocery store has a better brand or it's a better product than what the bank had to offer. They will go there because it's more convenient than driving up, getting out of their car, going into a bank, standing in line, and getting a prepaid product. So the banks lost that market simply due to convenience. But when we did some research on where people consider their ATMs to be in their lifestyle, we find that those same people consider the ATM to be a more convenient component or part of their life than even a drive-through McDonald's, which in the US is about the most convenient way. You drive in, you're in and out. They consider their ATM to be in a more convenient and important part of their life than that. So for the very reason that banks have lost this market to the convenience world, the convenience of the ATM literally can bring those customers back. Now, the other reason for prepaids from an ATM is not quite so obvious, because in the banking world, we've come to accept the ATM as, I'll call it a necessary evil. We've got to get the currency in people's hands. But everything about the machine costs money. You have to buy it, you have to get the software on it, you have to maintain it, you have to load it, and so on. And while there are some interchanges and fees that come from it, for the most part, it's a true cost to the bank. And the other interesting thing about handing out the money is once you've handed out the currency, it leaves your bank and you are not part of any of the transactions from that point on. When that cash leaves the bank never makes any money from it again. And in fact, when that cash comes back in, it's purely a cost of cash management. And yet, everything about a prepaid card is different. Everything about this prepaid card makes money. There can be fees right when it's sold from the ATM. The money is actually loaded onto the card. So the bank is holding the currency, the cash, and generating float income and interest income for the life of that card. And every time that card is swiped or tapped or used at a purchase, some of the money from that purchase goes to the issuing bank. So we see the opportunity to redirect some of that funds. Now, we're not saying cash goes away by any means. We're simply saying the linking of these two brings new income back to the ATM owners and to the banks and recaptures some of that. So where we have sat as a company, Better ATM Services, in order to make this very simple thing happen, the ATM industry is fairly complex. So you had to link the card manufacturers and the card issuers and the Visas and the MasterCards and so on and get them to transition a little bit. Then over on the other side, work with the ATM manufacturers, the financial institutions, and everyone in between. But as everyone works together, this becomes very simple to do. And we've literally created this massive new distribution channel. So a little bit more about prepaid products, just taking from the experience we've had over in the US. Some major groups that have not been in traditional banking have moved to products like Green Dot, NetSpend, and Bluebird to care for all their money for them and their families. And this grew up kind of a chasm apart from the banking industry. But we're seeing 3 or 4 pressures that are really pushing to move it back into the discipline. I mean, let's look at ATMs. They're secure, they're convenient, they're self-service, they carry all the oversight of traditional banking. It really is an ideal location for a financial instrument, where a grocery store rack is probably the least secure method of distribution of cards today, and yet, at least in our part of the world, it's the most pervasive channel for people to get their cards. So what we're seeing is the need for security, because people can steal numbers off the rack, there can be problems and fraud with the rack, but there typically aren't with the ATM and other banking methods. Lots of new regulation about controls of the customer or knowing your customer and reducing any money laundering and so on. The banks are far more equipped for these types of controls and disciplines. And lastly, when you buy a card at a bank, at a grocery store or somewhere else, you're not going to get that linkage of services that you would have if it was part of your bank's financial program and instrument. So the banks actually have the ability to now link that data together, link the customer with the card and services that can come. So as we see this bridge being built, it's literally moving that market back towards the disciplines of the ATM and the banking world. So where's the product stand today? It's been out with simple fixed value cards as well as variable load, meaning you can go up and just type in the number or choose from a menu of how much money you wish to load on each card, and the ATM will just identify and activate the card for that amount. It has now been approved for the first part of reloadable cards. That's where you get your card and then you can go back and load it again at the ATM or elsewhere. And we're even working with EMV, near field communications, NFC, and more, which is quite challenging on a thinner plastic, but the technology, the chips and the transmitters and so on have gotten so good today that that is in the very near future and is already being very much worked. The lower part of the card, the incentive and promotion, this is an area that we see traditionally banks have not been very good at marketing and tying their brands to other products. But we've seen, such as Chase Bank recently bought a company in the US called BloomSpot, kind of like Groupon, a group of brands that together where they can drive business back and forth. And so as we see the banking and finance industry tie into the commercial industries, there's a lot of cross opportunity for them to work together and drive business back and forth to each other. So what do people think about this thinner card? Well, for those of us in the industry, we've always thought that, boy, everyone would need a thick card, so if you came out with a thinner card, they'd think that that wasn't a real card, but we found just the opposite. In fact, people like something new, for one, and every time a person slips this in their wallet or their purse, and it's so much thinner, not much of a stack of cards, many of them even comment and say, boy, I wish some of my other cards were thinner. So it is possible that this is going to drive to where even traditional cards can be chosen to be done in a thinner mode. So with the consumer acceptance high, with the new product coming out, this is new, it's just been approved by Visa in the last several months, MasterCard launching, Discover Card in the US as well. It launched in these 3 zones in the US and is now expanding. We now have some activity going in a few foreign countries at this moment. So it'll take a little bit, but it is our hope to even bring it into your zone as well. Simply combining your ATM fleets with card programs, tying them together at the ATM with software and very simple modifications literally opens up a whole new world of revenues and services, convenience and customer work and acquisition. So I really do appreciate being able to come out here today and share this with you, and hope that you watch this innovation as it goes around the globe. And once again, thanks very much to the +Forum and having me out here. Thank you.
Thank you. Questions?